Hello, this is our first day accounting lesson. So we're just going to talk about the 5 words of accounting. Before I get started, I should say that everybody uses accounting, believe it or not. If you're going to be in marketing, purchasing, economics, sales, whatever, at some point you're going to have to deal with the accountants and they're going to have to deal with you. So this is my simplified version of what goes on in accounting. All right. To start off with, there's only 5 things that we can look at. And we, when I say we here, we are the company. We are no longer John, Joe, Jerry, anybody else. We are the company. All right. So we can look at the things we own, okay, the things we owe, the owners share the business. We can look at what we earn and what we use up. And we use accounting terms for those. What we own are assets. Some examples of those are buildings, inventory, cash, land, equipment, supplies, accounts receivable, vehicles, amounts we prepay. Accounts receivable represents money that people, our customers, owe us. And we can look at things that are liabilities to the company. These are things that the company owes to someone else. Wages payable, money the company owes to employees. Accounts payable, normal bills that come in the mail the company has to pay. Loans payable, what the company owes to banks and other places. Taxes payable, money that the company owes to the government, and accruals, things that will owe to somebody down the line. Equity represents the owner's share of the business. So equity is a kind of a nebulous term. It means if we stop right now, we stop doing business, paid off all of our bills, and whatever's left, we could send a check to the owner. And that would be represented by stock. Okay, stock is a share of ownership in the company. Less dividends. Dividends are the monies that the company earns that they send out to the owners. Real checks. Retained earnings, that represents all the past earnings of the company that are still in the company. All right. Revenue represents what a company earns. And we usually represent this in the accounts named sales or revenue or something earned, we might say. All right. Expenses represent all those things we use up. So we use up a lot of stuff. Could be rent expense, insurance expense, utility expense, wage expense, supply expense, tax expense, depreciation expense, cost of goods sold, and all these things, and these are just a few of them, these all represent accounts that the company would keep track of. All right. And that brings us to the next part, and I'll try and show you some examples of this in a minute. The next part I wanted to mention to you is the accounting equation. So at any time, the assets of the company have to equal the liabilities and the equity of the company. Okay? All right. So we have financial statements that we use to show this. And I'm going to try and find some examples of this for you in a minute. Financial statements represent the way accountants actually show things to people. All right. The first one I'll mention is the balance sheet. The balance sheet lists all of the assets, liabilities, and equity of a company. All right. And let's see if I can find an example of these for you. Oops. And I'm going to go to page 69 in our book, hopefully. Oh, access denied. I guess I won't go there. Well, you can take a look at page 69 in your book, and the bottom statement for fast forward is a balance sheet. And that lists cash, supplies, prepaid insurance, expenses, and a total of the assets. Then it's got liabilities, unearned revenue, total liabilities, common stock, retained earnings, total equity, and total liabilities and equity. And you'll notice, if you look at that the total assets equals the total liabilities and total equity. Okay? The next statement I'll mention is the income statement, and that's kind of the one in the middle of the page. And that lists the revenues for a company, and they had some consulting and rental revenue, and the expenses of a company, and they had 4 expenses there. The difference between the revenues and the expenses is net income if they had more revenues than expenses, or net loss if they had more expenses than revenue. The final statement that we'll look at here is the statement of retained earnings. And retained earnings just represents one particular equity account of the company. It includes the beginning retained earnings, or the retained earnings at the beginning of the year. And to that, we add all the net income from the income statement, and we subtract the dividends the company paid out during the year. And that should give us the ending balance of retained earnings for that particular period. Okay? So that's our introduction to accounting.